All right, well, welcome to The Boring Millionaire. My name is James Lemantia.
I'm Nick Polari.
And we are The Boring Millionaires. So today is Friday, February 7th, and we have the S&P right at 6,031, and the NASDAQ is at 19,500 roughly. According to Morgan, we are having a little bit of a down day today.
A little bit of a frowny face, but...
It's a little sadness. But there's really no reason to be sad. It's a very regular, standard down day. It's just a little bit of a cool down. On Monday, we saw the true panic of sell-off when we saw the tariffs officially be put into place. However, it is a strategy. It's not really so much a tariff in itself. And with that, though, the panic selling commenced on Monday. We saw a large fall down. We went right through the 50-day average. We fell a little above the 100-day, which is the 6-month average. And through the rest of the week, we saw it slow grind right back out of that hole. And now today we are, cooling down a bit. But it's nothing crazy. It's very normal, very standard, very typical. And the market truly does just go in two ways. It goes up and it goes down. So as long as the down days are healthy, balanced, and make sense, it's nothing to be afraid of. And right now, with the Monday fall that we saw and a little bit down today, absolutely nothing to be afraid of.
No, exactly. And like you were saying, the tariffs, I think that just scares people because they don't really know what's going to come of it. But already that's already been pretty much not resolved, but they have a freeze on them. So it's not even like it's really affecting anything.
Exactly, yeah. So they were used more as a strategic, political stance. We weren't really looking to gain funds from these tariffs. We were looking to negotiate bigger picture ideas, and it seems to be that, that's coming to fruition. So with the easing on these tariffs, it's going to just be a very short-lived panic that we sold out from, and, we're moving past it already. Market's already starting to forget about it. We're still going through earnings season. Earnings season is absolutely killing it, but not only has it been great, the few bad ones just getting pushed out of the way is also great for the market. The market likes to wait for market news, and usually it goes slower before the market news and accelerates after the fact. So now that we're getting through earnings, most of them are good. Forecasts are good. There's very few bad ones, but it's more important that we're just getting past it. Now we don't have to worry about the surprise attacks on these bad reports. We're beyond it now.
No, exactly. The market does move on any news. You got to know what's going on. And if these companies, are coming out and depending on what they say, you got to be a little conservative beforehand because they could come out and just completely bomb it or they could come out with positivity. So I think it's been pretty slow grind. Like you said, a lot of the earnings are just doing great. Also, all the Mega 7 except for Nvidia have reported, so that's also moving the market and they're out of the way. So
exactly, yeah, and those are the important ones to get out of the way. Of course, we were excited for the good that we saw in these reports. Like we said in several episodes prior, it's $10 trillion worth of market cap on those 7 stocks alone. So institutional investors are going to be a little hesitant saying, I'm not going to stake all my money on these, and then they all get wiped out and move the market tremendously. So now that news is behind us, we will have a smoother sail into record highs, I believe. The reason I believe we're going to see record highs is, I know we've been saying it, but the S&P 500 is starting to form a pattern that shows we are going to lift higher. So to just break it down real quick, the S&P 500 is the measurement of the stock market. That is the stock market average. It's the index most commonly used to follow the health of the market. The other priority index is the NASDAQ. So that's why we mentioned them at the beginning of every episode. But the S&P 500 particularly is developing patterns that show we will launch right into record highs.
But also, too, even on these down days, it's been a little red this week. It really hasn't fallen under 6.
Exactly,
so, it is healthy. Because I know for a while it was going, above 6 back to like 5.9. It's good that we're staying above that level. It's good, like you said, the health of it, and there's not really any scare in it because there's a strong foundation. We haven't fallen under it.
Exactly, yeah. There is a foundation being put in place. We've had the podcast for 3 months at this point, and the entire range of the S&P 500, like you just said, basically at the lows it was 58.50. At the highs, the all-time high is 61.28. So it's just a range. And as the range thins and narrows up, you see it start to develop a launching pad. And I believe that launching pad is going to send us higher. Given everything we've just discussed, as well as Monday, January 27th, we saw the DeepSeek fall. That was a big panic sell-off on a Monday. Just ironically, it was a Monday. But that first panic sell-off brought us to the 50-day average on the S&P 500. We always talk about how important that is. So then this past Monday, February 3rd, we saw another panic sell-off. Ironically, a Monday. Has nothing to do with it. but it falls through the 50-day, just above the 100-day, which is the 6-month, and then we're recovering. Even though they are down days, those down days are showing the strength in the market. They're showing the true health of the market.
Yeah, and the VIX isn't doing anything crazy. So, there is safety in that. The volatility's fine. So I'm not worried. And also, like you said, the Monday being a coincidence, but also Trump announced the tariffs on Saturday. So obviously the first day the market's open, people are going to panic. So.
Exactly, yeah. And like we also just mentioned, market news. We knew that the tariffs were looming. We knew that the policies were coming into place. So the market was hesitant about it. Now the news is out, old news now. So we could just move on beyond that. We're past the tariffs. We're moving past earnings. Earnings being mostly good. The only true, disgusting report we saw was Microsoft. And all of the big 7 had either good or modest earnings, despite Microsoft. So we're in good shape. We're in very good shape. I'm a buyer of all the Mega 7. I love investing in them every earnings season, just because they typically show some sort of opening in these stocks.
Yeah, speaking of openings, though, Amazon is showing an opening right now. It went from 242, it's down to 229. They beat earnings, doing great, but their Q1 revenue outlook is a little shaky. It's missing where, the market and Wall Street thought it was going to be. So there's some panic there. And also they're going to be investing around $105 billion into new AI and data centers, which also bringing back to the DeepSeek stuff. DeepSeek apparently can do it for cheaper with cheaper chips. So I think that is a little bit of a scare. I mean, same thing with Google. Their cloud revenue missed, but their ad revenue was up and their search revenue's up. But they're going to be putting more money into data centers and AI chips. They're going from $52 billion last year to $75 billion. So I think a lot of that is just if a company comes out, cheaper chips, they're making, AI products, I think people get scared in the market that it's going to be a real competitor. So I think there is a little bit of a sell-off in Google. There's nothing really to worry about. I mean, all their assets between both of them, they're strong companies. And I think the investments in the AI they're making, I think is just going to push them forward. I think it is a scary moment right now. But I mean, obviously investing all this money, I do believe will pay off in the long term.
I absolutely agree. AI is the inevitable future that we will be living in. And why would you want to spend more on something? So I think you're right. The initial look is, the DeepSeek is so much cheaper to build. But like we said in last week's episode, what value will come of that? So for a year and a half, they could be doing all of this at a much, much cheaper rate than the blue chips we talk about. But 2 years following that, their product could be absolutely garbage.
Yeah.
And then we just continue on with, okay, the heavy investing in AI is actually where the fruitfulness will come from. The little cheap model isn't going to work out.
No,
so I do think we'll
exactly.
see that, come into fruition. I do think it's important, though, that you bring up Alphabet and Amazon. Last week, I know I had expectations that they were going to just knock it out of the park and get cooking, and neither of them did. So that's important to notice because your plan isn't always going to be A1 steak sauce. Sometimes things will change and outlooks will become different than what you originally expected, but they're good companies to get involved in. I certainly am not selling any share that I have.
Yeah, right.
I'm grabbing more of them, but we like to mention that it's important to have several plans in place. My first plan A was that they were going to kill it and run. Didn't happen. So plan B had to regroup and follow the stocks in a different fashion than I was last week. And it's important to always have that on the forefront when investing.
No, exactly. You always have to have something set up. Okay, it killed it, didn't kill it, doesn't kill it, buy more. It's not going anywhere. And even to show that they have this money to invest in AI, they're a strong company. And if they can put up these numbers to invest in something like that, they're safe, structurally. So you don't have to worry about them going anywhere. And again, a lot of people don't want to wait. A lot of people don't want to, trust the process. But you have to. Investing is very slow. It's very boring, but it can pay off very big for you. It takes time. A lot of things do take time. You can't rush these things. So I think given the time, like you said, we'll see what DeepSeek actually is and if it's actually a threat to Amazon or Google. Right now, people think it is. Only time will tell. It's new. There's a lot of hype on it because it was dropped around what it was said. So we'll see the quality of it. We'll see, if something grows too fast, that's also not a good thing. Maybe they won't be able to keep up, or maybe they'll tank. Maybe they can't gain revenue. Maybe they can't keep the company afloat, and then that's out of the way too. So there's a lot that can happen in the future. It really depends on how everything runs. But Google and Amazon, I don't think are going to be touched, and it's just an opening right now.
It really is. And I do love one thing that you brought up about Alphabet is the assets that they have. So last week we discussed Disney and $1.8 point I made about Disney was I love their portfolio of their assets, their movies, their franchises, everything they got going on. The same thing applies directly to Alphabet. We've mentioned before, Alphabet is the parent company of Google. They also own YouTube. They own Boston Dynamics. They have cloud services. They do a million things. So investing in that is the important part. Investing in the proprietary infrastructure changes that they have in the world around us. That is the most important part. And that is what I primarily look for when investing. So absolutely love it. I'm nibbling on this little discount that we got going on.
But yeah, like you said, it's always opportunity. But also to move on to other earnings that we've mentioned, Pepsi missed its earnings by a little bit, but there's really nothing to worry about. They are up 1% on beverage and snack sales. North American sales were just a little weak, so I think that's where there's a little sell-off. It's only down like 10 points from 2 weeks, so nothing to worry about. They also are pretty positive on how everything's going to go in the future, so they're not too scared. And I think also, too, with the inflationary problems and the paycheck-to-paycheck living, I think that also would hurt the stock, because if you look at people buying junk food, well, you can't really afford as much as you used to. Got to cut back on soda. I think that could hurt it, but I think once everything gets solved out, people will start going back to, the things they love. They can splurge more. So I think Pepsi's not really in any worry. Also, they are a good dividend stock and they're strong. So I'm not scared about that.
Absolutely, yeah. Pepsi is more of a free cash flow type of stock, one that benefits exactly to your point. When people have more money to spend, sometimes, they'll buy things of that nature. They'll splurge more on food, and we'll see a benefit coming directly from PepsiCo on that. And you just mentioned it's a great dividend stock. Mm-hmm. It's under its 1 year average. Just money to be made right there.
Yeah. Also, too, to bring up Snap, like you were saying last week, their revenue's up 14%. They've had 2 million new subscribers on their Snap Plus feature since last quarter. And then also on top of that, they came out and said because of the TikTok ban that was looming in the air, no one knows what's going to happen with it, creators and advertisers are trying to diversify platforms that they're on. So they've been coming to Snap. Snap's been trying to help them. So I think they're starting to grow their market that way, as like you were predicting when you picked Snap. So I think it's good to back.
It is, yeah. I still love Snap. I still think the play is, only coming to fruition, and we're starting to see it. Like you just said, that report showed that the transition is starting to go there. And I love that you mentioned the content creator, because I could speak for myself. I know if I was a content creator bringing in revenue from TikTok, and there was any jeopardy to that, you would have to explore other options. So, all right, in this current moment, we're not at risk of having TikTok get banned, but you think of like a glass vase. You drop it on the floor, you pick up all the pieces, you glue it back all together. You still have the same vase, but you know that it was broken. I feel like that same kind of mood is there with the TikTok thing. Okay, they still got it going on right now. It's not banned yet, but just as a surprise as it was the first time, we could get hit with another surprise saying that they're banning it.
Yeah,
so
because they only have a time period, so if it doesn't get bought out by anybody or anything, they could go through with
absolutely
the ban.
Yeah.
Also, I think the ban pushes people to really put stuff into perspective. I think a lot of people don't realize, like, okay, I'm on TikTok, this will last forever, it's perfect, I have the money coming in, but then you realize these threats to your business, and you realize you have to expand, and you don't realize that at the time because you're so comfortable, but when that comfort is like shaken, that's when you have to look to other options. And I think even just that, even if TikTok doesn't get banned, they're going to still be building their Snap following, and then they'll still be using Snap because they have to have backups in case something happens.
I agree. I think any content creator that sees themselves as a business will, navigate that accordingly.
And then also one last one, just because we brought her up. Chipotle earnings pretty much just met what they expected. They plan to see 315 to 345 new restaurants. But also, this is one thing I kind of like. Their food and packaging and beverage costs went up. But one of the reasons they said the food costs is because they're trying to make sure that their portions are generous. Because I know that there was some skepticism about that their portion size shrank. So I think in giving consistency, it also builds trust in the consumer. And the consumer will choose to go there because they know what they're going to get. That's the good thing about brand recognition. When you have a brand, no matter where you go, you know what you're going to get. So there's a positivity in that. And I think just when you see that Chipotle, you know the quality you're going to get. And them reinvesting in that, I think is very strong for the company.
I agree. Brand recognition is one of the most valuable things a company can have. And it's so hard to build, yet so easy to destroy. So I love that they're putting their focus into that. I really do. One more earnings report that we had this week I would like to circle onto. We mentioned last week AbbVie was coming up. AbbVie did kill it. They're running. They're at 193 right now. But many, many moons ago, in our second episode, I put a buy signal on AbbVie. It was at 166. It was a little stagnant for a while. It was bouncing between 180, 165 since that buy signal was put into it. However, the patience was worthwhile. We are now up 16%. They still pay their outrageous dividend of 2.75. AbbVie is just absolutely a killer stock, and proof is in the pudding. Sometimes you just got to wait a little longer than you would really like, but that's the boring route that we like to express. We're not here to get you rich in a quick, exciting way. We're here to build you wealth in a nice, slow, boring, comfortable way.
And speaking of wealth, what you got for your 50?
So my 50 this week is very boring, actually. What I'm doing is I'm taking my $50, breaking it into five $10 pieces. 10 of it's going into Apple, another 10 into Amazon, another 10 into Microsoft, another 10 into Alphabet, and the final 10 is going to go into UPro. I just want to get involved in the Mega 7. They're a little bit discounted on earnings. Alphabet and Amazon particularly are discounted, so Amazon fell basically just above its 50-day average, which is also its 3-month average. That average is 226, and in today's trading, we saw it at 228. So I think perfect opportunity. I do think it could go the $2 lower, but I'm not here to penny pick. I'm here to invest in the stock market. Same kind of idea both with Alphabet and Apple. They had decent earnings that had come out. The stocks didn't really respond as well as we would have hoped. Alphabet fell just above its 6-month average. Apple is doing relatively the same thing. Apple also is having a little bit of a double bottom just about on its 1-year average. So the 1-year average is 222 on Apple, and it fell the lowest to that point last time it fell. So I think it's going to bleed out to another 222, meet the 1-year average, just run from there. Microsoft, I'm just buying because I love Microsoft. They pay a pretty fair dividend, and Microsoft's just never going to go anywhere. They are also under their 1-year average. There's no real trading technicals showing me like this is a great signal to like get it this second, but I want to be involved in the Mega 7. I've mentioned before I like to re-strengthen those positions any chance I get the opportunity to. And then the fifth one is the UPro S&P 500 double weight index fund. So an index fund follows the general market. This S&P fund follows the general market of the S&P 500, but it does so at a double pace. So typically if the market were to be up 1%, this UPro index fund would be up 2%. Give or take, it's not to the penny, but relatively that's where it will trade. So I'm just taking my 50, breaking it up into the core of my portfolio, as well as what I believe to be the core of the planet and the way we live as a society. So I want to be invested in that.
Yeah. Also, one thing I did forget to mention, Google and Microsoft both missed their cloud revenue, and they did cite that they think they just didn't have the space for it. So seeing that they're both going to be putting money into building out new data centers and AI and all of that, I think it is, again, just the fear. I think they'll be back on track with the revenue. So I think they're great things to get into right now. On my 50, it's funny enough, when we pick these, it's very rare that we discuss any of them. And so it's funny enough that I actually have Amazon and Google on mine because it just goes to show the great opportunity of it. We didn't talk about it. We didn't discuss it. We don't pick these lists together. We pick them on our own on what we think is good. So picking Amazon and Google, both of us, it's just good to show this is the time to get in, especially Google. It's down, I think it was like 206. It's 185. So perfect in. My next one to, kind of what you were saying, and with the earnings report, I want to get in on Snap also in this $50 list with my $10 because everything I said, it's a positive. It looks like it's strong. It looks like it's working on growing. So Snap, I want to be involved with that. Another one to go back to that I've picked in the past, but I haven't built on, I want to get a little more PayPal. It fell. I believe it's trading at, 78. It was at around 88, so it's down about 10 points. And they beat earnings, and they have positive outlook, but people are just afraid, Apple Pay is going to be a competitor on it. People just fear that. I think PayPal is still a strong company. It's going to be around. Like I said, whenever I do online transactions, I mostly use PayPal. They have the Pay in 4 stuff, so that's another initiative to use it. And then my final one, I have Airbnb. I think it is a great company. If you ever own property and you want to rent it out, you just have something idly laying around that you're not using or not using at certain times, like a beach house or even your house, you have an apartment in the city, you want to make money off of it. Airbnb is set up to do that. It connects the consumer with the person that is trying to rent out. It's something that I feel a lot of people wouldn't do if they didn't have the resource to do it. And I think Airbnb puts that resource in your hands.
It's a great way to put it, and I absolutely love Airbnb. I love it particularly right now because it is a real estate play. It's a unique real estate play in, the service that they're offering. However, with interest rates coming down and I think general inflation beginning to come down, home building is going to be more prevalent than it was in the years prior, as well as investment into real estate. And I think, more people might be inclined to say, let me buy that beach house. Now I know I could use Airbnb. I'm getting a better rate on the loan. So just setting up for perfect usage. I also have to say I've used it as a consumer plenty of times. Not once ever had like a problem. Felt even more conveniently used than most hotels I've gone to. So no reason not to do it. And we spoke a lot on Snap already, but I love that you're, re-strengthening your position in there. I think we're really going to see it start to climb out of the hole it's been.
Yeah, I hold it in my long-term account. I don't see why I wouldn't hold it in this account also. So
absolutely. And then speaking of our $50 accounts, last week you had mentioned you were putting $20 into NVIDIA. We were putting a big buy signal on it, and that buy signal certainly paid off. It is up 7% since it landed at the 120 mark. It did go a little beyond that, but we were pitching the buy at 120. Today at 129, we're up 7% on a blue chip Mega 7 stock. They do have their earnings 2 weeks from now on February 26th. I think they're going to knock it out of the park. It's a little bit of optimism. I'm not really going on anything, but I do think all of the fear in the market is going to be removed by them. I think a lot of the deep-seek fear, the initial fear, is going to be removed by them. And I think as long as their earnings report is just decent enough, the market's going to grab whatever they can if it's still presenting a discount, and it's just going to run. I really do.
Yeah. Going back to the Amazon and Google trying to build up their AI, they're going to need chips. And they're going to be buying them from NVIDIA.
Yeah.
So there's money coming in from that. We've said it before, they make all the chips. They're not going anywhere. It's the last of the Mega 7s. So I think that really, when you hear the last report, I think that is a good boom signal. I feel it's going to be good. I feel they're going to kill it too. So
yeah, I'm very eager for it, to be honest. And to the point you just said, it's the wait and see market. We were waiting for all these earnings to get wrapped up. Once they're wrapped up, no more waiting around. Now market's going to have to pick a direction to go in. So I do just want to say, with the NVIDIA buy that we put out, we just want to show you what we saw through our eyes. We took a blue chip stock. It was down 20%, and it was on its 1-year average. Week and a half later, already making money on it. So that is what we see through our eyes when we make buy signals. We want to teach you how to invest not only well, but confidently. We want you to feel confident in your money. We want you to grow your money, and we want you to build a nest egg. Flash forward 20, 25 years, kids are going to be in school. Houses are going to need to be paid for. So this is the stepping stones in making that as much more convenient as you possibly can. So with that, follow us on Facebook, follow us on Instagram. We're always here to teach you. We're always available for direct questions. And with that, let's continue making money in the stock market.
all right, till next time. See ya.
Thank you.